Basically, when we say Sharia compliance, or we have to define what Sharia is. Sharia is basically the divine law as revealed in the Quran, which is the holy book for the Muslims, and Sunnah. Sunnah, what we refer to, is the prophetic traditions of Prophet Muhammad, which basically consists of his sayings, practices, tacit approval and disapprovals of the actions of his companions at that time. So all this knowledge is basically formed in the type what we call Sunnah. And that leads us to the sources of Sharia. And those sources are important because they are the instruments used by Sharia scholars and Islamic jurists to detect and extract basically a Sharia ruling related to Islamic finance, or address an issue in relation to Islamic finance. So the first and foremost, they would refer to the primary sources, which is the Quran and the Sunnah. And we have secondary sources as well for Sharia. So Quran and Sunnah basically consist of what we call it constant Sharia rulings, things related to Sharia rulings that non-changeable rules. Rules will remain whether regardless of time or place. For example, it's stated clearly in the Quran that dealing with usury is prohibited. So this is a constant Sharia ruling that will not change at all. There are some flexible Sharia rulings which basically Islamic scholars can use in terms of addressing new arising issues. Sunnah, as a primary source of Sharia, addressed some of the issues raised in the Quran and expanded to some extent. Sunnah provided the techniques or tools for Islamic jurists in order to address new issues arising related to Islamic finance. Those then we move basically to the secondary sources of Sharia, Ijma', which is the consensus of qualified scholars. And we have some, basically currently some Islamic bodies which represent to some extent the concept of Ijma', like the Accounting and Auditing Organization for Islamic Financial Institutions and the Islamic Fiqh Academy. Both bodies consist of Islamic scholars, represents pretty much the Muslim world. And they come together on regular basis. There is an agenda for them to discuss new arising issues that they need to research and make a Sharia rulings about those issues. And based on that, for example, we've got now around just over 50 Sharia standards issued by a UFI regarding Islamic financial institutions. However, those standards, they don't address every issues that Islamic banks may face, because Islamic banks operating in the UK, they may face issues different from issues that banks operating in the GCC area, different to issues from banks operating in Malaysia or in the USA, etc. So then that's the role of the Sharia Supervisory Committee then, is to address those issues based on the Sharia standards, and takes us to the constant Sharia rules mentioned in the Quran and the Sunnah. Another instrument is analogical reasoning, which is known as qiyas. It's based on taking an existing issue in Quran and Sunnah. After analyzing the rationale of this issue, if the new arising issue has the same rationale, then it will have the same ruling like the existing issue. I'll just give a quick example, in a way unrelated to Islamic financial transactions. For example, drinking alcohol is forbidden for Muslim, clearly in the Quran. Scholars at that time, they researched the rationale for prohibiting alcohol. So the majority said it's basically the intoxication of alcohol, which people, when they are drunk, they will not be aware of their surroundings. And as we know nowadays, they fight, they do silly things, they might, drink and drive, kill other people. So it has some negative consequences. However, the Quran recognized that there are some benefits from alcohol as well. Basically, people trade with it, make profits, sell it and buy it, etc. But the harm coming from alcohol is greater from the benefit coming from it. That's why it was prohibited for Muslims to drink alcohol. So nowadays there are different kind of drugs like cocaine, heroin, this sort of drugs, which there is no specific ruling in the Quran or Sunnah regarding those drugs. However, when we looked into the rationale or the effect of those drugs, it's pretty much similar to alcohol. When people get high, they don't realize their surrounding, and they would be completely in different world. So then the scholars applied the ruling of drinking alcohol, which is the prohibition, that on taking drugs as well because of the same rationale. So that's just to basically illustrate the concept of qiyas, or analogical reasoning. And it is, in a way, could be used in Islamic finance for basically to deduct a Sharia ruling regarding, let's say, a new product. For example, Islamic banks, they have to manage risks. Conventional banks, they do interest rate swap agreements. If Islamic banks wants to use something similar, so here the instrument of analogy can be used. However, this instrument, the outcome of this instrument should be compliant with Sharia. So they can't use the interest rate swap. There's profit rate swap based on different principles. The most prominent one, they used commodity murabaha for it. That's just basically an example. Then we have ijtihad, which is the individual interpretation related to an issue. And that's basically the ijtihad of basically the interpretation of the Sharia Supervisory Committee for an Islamic bank regarding an issue faced by that bank, and their views regarding that issue. Then they will issue a fatwa for the bank to follow. There are some other secondary sources, like which basically, depending on different school of thoughts within Sharia, like there is something called istihsan, which is something found or practice found in the society which perceived as being beneficial, and there's nothing in Sharia contradict or suggest otherwise. Or maybe something it's talked about in the industry, which is the al-maslaha, or the social good, translated as social good. Again, if something or a financial transaction that basically provide a benefit to the society and it doesn't contradict Sharia in any way, so that basically can be applied. Going to talking about the constant Sharia rules, one of those rules is the originality of anything is permissibility under Sharia, unless Sharia states basically that certain transactions are prohibited, but everything is permissible. So, coming then from the definition or the meaning of Sharia, then Islamic jurists defined Sharia into two types or two categories, what they called fiqh or jurisprudence. The first one is these in terms of with issues related to worship. Basically, it governs the relationship between man and God. The second one is or deals with the issue related to transaction, to dealing with other people, selling and buying, etc., which is basically part of it is the Islamic finance and Islamic banking. The difference between the two, Sharia is the law and jurisprudence or fiqh is the understanding of this law. Just to give an example, let's take, for example, there was a discussion about the NHS bill in the government. So, as we know, the government will draft the law. The policy advisors will draft the law. The government then will approve it. It will get passed to the parliament to vote on it. If passed, then the House of Lords, etc., until it becomes a law. However, this bill or this law will not address every detail related to the NHS as a whole, the health service as a whole. Then this law will be taken to the NHS trust or the relevant body who will interpret how this law will affect each NHS trust in their practices. So that's just an example of talking about the law and the interpretation, the actual implementation of the law. So that's Sharia and jurisprudence or fiqh. So that's briefly just the introduction to get into the Sharia governance, so we know where the Sharia governance is coming from and the role of the Sharia Supervisory Committee as a whole. So this chart basically shows that the structure for the Sharia governance for an Islamic bank. As we see, the Sharia Supervisory Committee, they usually consist of at least 3 scholars, and those scholars are experienced in the field of Islamic financial transactions and Islamic finance and Sharia as a whole. This committee is an independent committee. They don't report to anybody in the business. They don't report to the board of directors or the executive or the management committee, in order to ensure their independence and basically credibility. Then there is the Sharia Compliance Department. Again, the department doesn't report to anybody in the business. Their direct report is to the Sharia Supervisory Committee. And basically the Sharia Compliance Department will be monitoring the day-to-day operations of the Islamic bank and advising the senior management, the different departments and business areas on the application of Sharia and any issues. And part of their role is to conduct the regular Sharia compliance audit for the bank. Sorry? Again, okay. I'm not sure. Are the slides printed to be distributed, or
They can write an email to us.
they can send it to you. The Bill IBI can send it to you separately, or if you give me your email address, I can send it to you, no problem at all. So that's basically the in terms of the structure for Islamic banks. As we see, there are an extra layer of governance for Islamic banks in comparison to traditional banks. As we know, there is a Sharia Supervisory Committee, there is an internal Sharia Compliance Department in the bank. Is that okay to move on? Okay. So the concept of Sharia supervision and the Sharia Supervisory Committee, basically, it's not new in Islam or in Sharia. It's something rooted basically to the time of the Prophet, over 1400 years ago. However, this concept is known as al-Hisbah, and it's basically in the Quran, in chapter of An-Nisa, verse 82, it says, surely God takes account of all things, and basically taking account, that the translation of al-hisba, it's accountability and supervision. At the time of Prophet Muhammad sallallahu alaihi wasallam, he was the point of reference at that time, and he conducted the market supervision himself. So he used to go around in the market and see how people are dealing, how people are selling and buying, and then correcting any mistakes or guiding them to the best possible way. For example, once he was in the market, he saw a man selling wheat. He put his hand in the sack of wheat. He found it wet. He asked the seller, he said, what's wrong with your wheat? He said, they are wet basically because of the rain. But the Prophet then said, whoever cheats isn't of us. Because basically they make the wheat wet, so it will be heavier. So a kilo of wheat, instead of being this size, when it's wet, it will be like that. So it's a way of cheating. And then the Prophet ﷺ said this famous basically saying that whoever cheats isn't one of us. And he didn't, there's other narration basically for that, but this is the most correct one narrated in Sahih Bukhari and Muslim. And it says whoever cheats. It doesn't say whoever cheats Muslims. No, whoever cheats in general, whether you are cheating your fellow Muslims or non-Muslims, isn't one of us, isn't one of the Muslim community. And that's a general rule and one of the constant rule in Sharia, if we go back to the constant rules. So this rule is very important in Islamic finance, because any form of cheating that Islamic banks may use to mislead their customers or basically give them a product that isn't suitable for them, doesn't meet their needs, and just basically highlighting some benefits, which could be true or not, for the customers to push this product, that's a type of cheating. And when we come to the audit, so the auditor should be aware enough in order to realize these sort of things in any financial products offered by Islamic banks. However, this task of hisba or market supervision, it's basically continued after the time of Prophet. So his companions, the caliphs, they also used the same method. The caliph Umar ibn al-Khattab, he used to go at night in the market, basically undercover, and see what's going on. One very famous story that a mother and her daughter, they used to sell milk in the market. So they used to prepare the night before. So he was basically in the market just checking, and he overheard the mothers asking the daughter to add water to the milk, to mix the water with the milk, so the quantity of milk will be more for them to sell. So it's a type of cheating. However, the daughter replied that we shouldn't do that. That's wrong. The mother said, Umar is not here. Umar is the caliph. So there is no problem. Said, if Umar is not here, God is seeing us. So it's also not only the supervision, the conscious of people working within the Islamic finance industry is also important, because the supervision can achieve its objective to a certain extent. But if those people are not trained to the right level and made aware of basically the extent of compliance with Sharia and these ethical values, they will not have this sort of conscious about dealing with that. And this is the problem with our banking system. If we have proper banking system with the right ethical values, we will not basically be where we are now in terms of all the banking scandals and banking crisis. And that's why it's important. It's one of basically the Sharia compliance framework, that there is part of the induction for people joining the bank is a Sharia compliance training. So they are aware of those values and ethics to be observed in their role. And it's a duty for the bank basically to train them, because you can't make them responsible for that if you don't train them, if you don't make them aware of those values. So after that time, the concept of HISPA, or market supervision, started to be more constitutionalized. It started to be as a constitution, basically that the state is responsible for, and the muhtasib, or the supervisor, is appointed by the state and basically chosen on certain qualifications, which is similar to the qualification of a Sharia scholar or jurist, who basically has to understand Sharia, to assess the market, what's right, what's wrong, etc., all those qualifications. And it was more broader in terms of, in more general sense, very broad, not only for financial transactions, just supervising the market in general. So, coming to those days, basically, the idea is developed, and when Islamic banks started 40 years ago, the Islamic finance concept wasn't crystallized yet, wasn't clear to the people. Bankers, whether they are Muslims or non-Muslims, it's not assumed that they know the aspect of Sharia or Islamic finance, or how they can implement it in the banking operations. Therefore, they needed this sort of supervision, which is basically achieved by appointing a Sharia supervisory committee for the bank, and internally establishing Sharia compliance department, who will be working with the bank's management and teams on a daily basis, supervising them, guiding them, and ensuring there are controls in place and framework basically for risk, non-Sharia compliance risk management in place, in order to ensure that the bank is fully compliant with Sharia. And this is basically one of the main requirements for Islamic banks. The biggest risk for Islamic banks is Sharia non-compliance risk, because that will affect the bank, and there's a huge reputational risk for the bank. That's why that person should be able to address any issues with the banks, ensure there is a control in place, and assist the bank's management in order to achieving their goal. I think, wow. Okay, I have to rush in this case. Basically, it's the concept of Sharia supervision is based on the Sharia ruling of commanding the good and forbidding the bad. But that's not for anyone to do unless they are qualified to do that. And again, that's one of the reasons that Islamic banks, they had to have this sort of framework and governance. The term Sharia compliance audit is a new term, basically, and again, it's derived from the concept of HISPA. I'll have just to go quickly through those slides just to get to the part of basically the field work for the Sharia compliance audit, since we are tight on time. Those are basically the main roles for the Sharia Supervisory Committee, and which I think I pretty much explained. Responsibility of the Sharia Supervisory Committee is advising the Board of the Banks on different issues related to Sharia, reviewing and approving all policies and procedures, approving new products launched by the bank, or amended products. In order to ensure any amendments, they don't contravene the Sharia compliance principle, the underlying principle for this product. Supervising the work carried out by the Sharia Compliance Department. As we said, the Sharia Compliance Department only reports to the Sharia Supervisory Committee, so they should ensure also it's a form of ensuring quality and basically supervision on the supervisor in a way. Then, based on the audit and the review of the Sharia Compliance Department, a report will be basically then raised to the Sharia Supervisory Committee, and based on that report, they will issue their report, which is usually included in the financial statement of the Islamic banks. You'll see the first 3 pages, the report of the Sharia Supervisory Committee, where they will give their opinion about the bank's compliance with Sharia during the audit period. It's pretty much the same duties and role for the Sharia compliance officer, or the person responsible for Sharia compliance, who as well undertakes the Sharia compliance audit. Okay. Moving on to the actual Sharia compliance audit process, it's pretty much in terms of the structure of the process similar to the usual internal audit. However, in terms of governance, internal audit is different from the Sharia compliance audit, and they are 2 different functions. As the internal audits, they have their mandates and things for them to audit. The Sharia compliance department or audit, they also have their mandates in terms of things to audit, which is not covered by the internal audit for the bank. It starts with the plan for the audit, conducting the audit, prepare and discuss issues found and recommendations, basically to strengthen the framework for Sharia and compliance risks in the banks. Then discuss the findings in a report presented to the Sharia Supervisory Committee. Then follow up on the issues found in the audit reviews with different departments and business areas, and the cycle goes on in terms of reviewing and then auditing. That's in terms of the classification of findings. For the audit issues found is basically good if a department, for example, they exceed the minimum compliance requirements. Let's say they are very proactive in terms of signing off everything, ensuring their processes are in place. So they have more proactive approach rather than reactive, waiting for the Sharia compliance auditor to audit them and find issues, then they will resolve and address those issues. So on the contrary, they have enough awareness to come up to the Sharia compliance officer to raise issues with them. So those usually, they will be rated good. Satisfactory is basically if they meet the framework for Sharia compliance, and room for improvement if there are issues, etc., and satisfactory if there is severe issues, A or B rated issues. So those are just the issues. Just quickly, methods for basically the Sharia compliance audit. The first one is financial concentration of undertaken financial transactions method. It's basically this method focuses on the concentration of financial transactions. Let's say the bank focus on commercial property finance, and the biggest portfolio they've got in commercial property, and especially financing big deals. This is an area that there might be shortcuts or an errors that the auditor can focus on. The second method is typical and untypical financial transactions. Let's say a current account, it's pretty much automated on the system, on the banking system. So the manual work or the involvement of staff is very minimal. And this process would be initially signed off and approved for Sharia compliance, that it addresses all the issues. So the auditor will have focus or focus on this area. It will be audited, but the focus will be on the untypical transactions, things that they may be tailored for different customers, different clients. This then the auditor can focus on this type of transactions more, because the breaches, they are more prone basically for breaches and errors. The third method is core and outsourced business methods. Is if, as many financial institutions, they outsource basically some of their operations to a third party. If within the bank, the Sharia compliance department can pretty much, or they already established a control framework. However, the margin of errors is more and more substantial when the tasks basically are outsourced to a third party. So in this case, this would be a reason for focusing on this type of transactions. In terms of things that, or the scope, basically the main scope of the Sharia compliance audit is to review and audit all contracts and agreements within the scope of Sharia compliance, all regular internal reporting, internal communication between the business areas being audited if there is a reason to do that, investment managed by the business area if the audit is for a specific business area, or by the bank as a whole, reporting from the internal and external auditors if there are issues raised. The Sharia compliance auditor can look into those issues and see if there are any implications from a Sharia compliance perspective. Invoices and purchase orders, FX transactions, because there are lots of restrictions around dealing with FX and currency exchange. Investment certificate transactions, review of all shares being purchased. If banks, I don't think there is any Islamic bank in the UK, they trade or invest in shares as investment or provided to their customers, but many banks do. So if that's the case, this has to be audited as well. Profit calculation and distribution of investment clients and shareholders. This is very important, and maybe very few Sharia compliance auditors are aware of these things. They assume if the product is developed and fully compliant with Sharia, it's fine just to operate on the same basis. And most banks, they use the core banking system, for example, like MySys or other banking system. Those systems are built on calculating interest rate. They don't by default accommodate Sharia compliance products. And the calculation method of profit rate or rental rate, for example, for home finance, that based on diminishing co-ownership and lease, is different. Certain pennies or pounds basically might be miscalculated, or that would be the difference in the calculation. And over a long-term period of finance, like home finance, 20, 25 years finance, this will be a big amount of money, and there is a big responsibility on the bank. From Sharia compliance perspective as well, this might be a big issue for the bank, that either way, it could be overcharging customers or undercharging customers. That's why it's important to audit and basically understand the methods and the implication of the methods used by the core banking system. Disposal of the non-Sharia compliance income, that's basically put in a separate account and disposed in according with the guidance from the Sharia Supervisory Committee. review of expenses, ensuring that all new and amended products are signed off, review of all procedures and policies in order to ensure the full cycle is in compliance with Sharia. That's just an example in terms of the review, what it covers for each department, and the overall Sharia compliance audit review for the bank. Again, that's an example for a product based on diminishing musharaka, diminishing co-ownership with ijara, and things that can be looked at, and how basically the rating goes. We have just go through this. Just main challenges for the role and basically effectiveness of the Sharia supervision is regulatory challenges. Sometimes or usually any regulations issued by the regulator here in the UK, PRA or FCA, as we expect, it's just basically standard regulations for banks in general. However, some of those regulations may have constraints for Islamic banks that will limit their ability to comply with Sharia. So that's an issue that has to be addressed, and we faced in practice during my time and experience in my bank that many issues, and some of them we were able to basically to raise with the regulator and discuss with them, and we developed the solution for them that then they introduced to Islamic banks in the UK. Legal challenges, many banks, and I'm sure if there are solicitors here in the audience, they don't develop their product themselves. They'll go to a legal firm, say, this is the product I want. They will have the legal framework for the product. They will give it to the bank. They will review it. And that's wrong. The legal framework doesn't by default fit the product that the bank developed. Both of them should be basically integrated and basically corresponding to each other. Market constraints in terms of basically the limitations in the market for Islamic banks, competitions, why conventional banks, they can charge, for example, redemption fee of 2 or 3% on a mortgage, and Islamic banks can't, because the structure that Islamic banks use for home finance is different. Moving from form to substance. Thanks. That's a key thing. I mean, pretty much if you go to Islamic finance conferences, most speakers, you will hear them talking about we should basically, or Islamic banks, they should incorporate Sharia objectives, maqasid al-Sharia, in their product. They all talk about it, but no one tell you how. Or maybe no one knows how to do it, unless they have the right knowledge. For example, maybe some of them, they don't know what Sharia objectives are. In order to, that's the first step, in order to incorporate them. There are many Sharia objectives. One of them, for example, saving or protecting the religion. And for Muslims, protecting their religion in Islamic banking, offering alternatives for interest-based financial products, in this case, providing them with Sharia compliance products. So that's, in this case, they are not compromising on their religion. So that's the maqasid al-Sharia, or the objective of Sharia regarding that issue. Protecting their wealth, providing viable products for them, savings products, investment products, to protect their wealth and to grow their wealth, rather than for them, if they don't want to bank with traditional banks because of interest, they keep their money with them or under the mattress or whatever. So this is just a quick example. We are tight on time. I can't go on regarding that. Developing the next qualified experts, or the generation of experts. And this is a key issue, that if we don't have the right experts who can identify and address those issues, Islamic banking will not basically grow on the right level, or the right pace, or what is expected from Islamic banking. Adapting to rapidly growing financial market, again, the requirements for in new products, addressing different issues. We know liquidity is very challenging for Islamic banks, and it's a legal requirement, liquidity asset buffer, which is, I think, it needs to be addressed, or we are addressing currently with the regulator for solutions. Working with Sharia guidelines without being overly lax or inflexible. That's very important, because people who are inflexible, they don't understand. Maybe, yes, they are Sharia scholars, they have Sharia knowledge, but they don't have enough knowledge and experience to understand Islamic financial transactions and the banking system or the financial system, how it works, in order to basically marry both of them and apply Sharia in finance without compromising Sharia. Or those who basically don't know Sharia and they are basically very relaxed about it because they don't understand the Sharia implications, so for them everything can be done. And I conclude with that. Thank you very much.